Good. So, folks, Eddie Forero with Nationwide Mortgage Bankers, is that right?
Yes.
All right, cool. And Isha Realtor with EXP Realty. We're here at 33 Vernon Place doing our open house on Sunday, and just wanted to take a few moments to make a quick video and educate our clients. Eddie, so there's a lot of talk of perhaps the interest rate going down soon and so forth, and a lot of buyers seem to be holding off on purchasing. And of course, elections around the corner. That's always a reason for people to hold off because they don't know what kind of a market we're going to be in post-election. We don't know who's going to be elected, and we don't know who's going to be in the White House post-election. So there are a lot of buyers who are holding off. The big question is, should buyers be holding off? Are we expecting interest rates to go down? Even if interest rates might go down, should buyers be holding off, or should buyers be moving forward with the purchase?
I think they should be active in the market and they should be looking now, because what's going to happen is when interest rates do come down, it's really going to increase the demand, so a lot of people are waiting for that, and ultimately there's going to be more people that are showing up to the open houses and more offers on those properties. So it's a very good chance that that property is actually going to sell for more, right? So whatever few dollars a month that they're trying to save, or hundreds of dollars a month that they're trying to save, they may end up paying more in the end, because they're going to end up spending that more money for the property itself, which is going to have them borrow more money. It's going to be more expensive for them on a monthly basis, so they may not save the money that they're looking for in the end.
So you're saying that a lower interest rate brings more buyers out?
Yeah, it's going to increase the demand, and then what's going to happen is the seller now has more options, right? So they may have more offers on that property, so they're going to try and go for highest and best, and get the highest offer that they can get, so that whoever is making an offer on that property is now competing. Instead of competing with 5 people, now they're competing with 10 people.
Which is what we saw, during COVID, buyers had to offer 30, 40, 50, even $100,000 over asking just to get their offers accepted.
Right.
So they ultimately ended up paying more for the house.
Yeah.
And not less, even though the rate was quite low.
Yeah, so if you're trying to save $200-300 a month in mortgage payments because of the interest rate, but in the end you may end up spending, an extra $30, $40, $50,000 for the house, where it just really, you won't have those savings. But if you own the house, you always have an opportunity to reduce that monthly payment and get it to where you want it to be once interest rates go down. So you can still take advantage of low interest rates, but it's a good idea to try to get into the property before home prices go up even further, because then you're really not saving that money. So it's always a good idea to try to get in now, and then at any point in time, once you own the property, you can adjust the payment.
I think that's the magic formula. Buy the property when the competition is less,
Yeah.
and then once you are the homeowner and the rate goes down, refinance.
Yeah.
Because you can always refinance a lower rate.
Yeah.
But if the rate goes down and you try to buy the house, now you're competing with all of these other
Right.
buyers out there.
Right, and you're spending more money for that property 6 to 12 months later than you would be spending now, so you really don't save that money. And if you own that property, then your home value goes up as well if the home prices are going up. So now you're building equity in the property, and then you have the opportunity to reduce the expenses in the property, and you get everything that you're looking for. So I don't think it's probably not a good idea to wait too long. It's better to be active in the market.
Got it. Now, of course, interest rate is so dependent on so many other factors: individual credit scores, how much they're putting down, whether they're buying a 1-family or 2-family, whether they're buying to live there or rent it out. So interest rate really is dependent on person to person.
Yeah.
Where can people reach you if they want to explore their own case and figure out what their personal interest rate will be with you? Where can they reach you?
You can find me on Facebook, you can find me on LinkedIn, my personal website, also my cell phone number, all that stuff.
Fire away.
Yeah, 516-304-0465.
Awesome. Isha Realtor, Ishmael Kolia. If you want to reach me and talk about your own personal purchase goals, or even goals of selling a house or an investment or rental, 914-215-1540, 914-215-1540. Isha Realtor with EXP, and Eddie Forero with Nationwide Mortgage Bankers. Eddie, thank you so much. Really appreciate it.